Hi. Today we'll be talking about how you can save taxes on the equity gains that you might have accumulated. So we will be talking about what is Section 112A, how it works. We'll see an example, and we'll also talk about a few considerations and timing. For the clients of Wealthup, we'll be taking care of this. We'll be reaching out to you what changes need to be made in your portfolio. But if you are not a client of Wealthup, feel free to use the information here. Or if you need help, feel free to reach out. We'll be happy to help you. We'll be sharing the contact details towards the end of the presentation. There is also, one slide that we have added at the end, which is summary. If you just want to skip to that, feel free to do that. Okay, so what is this rule? Section 112A. Under this section, you are given up to 1.25 lakhs of profit that you can realize every financial year per pan without paying any taxes. Any gains that you have over and above 1.25 lakhs, you'll be paying 12.5% tax. Okay. Now, for these to be applicable, two things are there that you need to be, keep in mind. First is that it has to be equity. Either it can be shares or it can be mutual fund, but equities. Okay. And the investments must have been held for more than 1 year. Okay. Okay. So now how it works. You need to identify the units or, the shares that have been held for more than 365 days with 366 days or above. Now, you can sell these investments to the extent that you are realizing a profit of up to 1.25 lakhs. Okay. Till that point, there is no cost. Okay. After you have sold, you have received the money, buy them back immediately. What that means is you are able to maintain your market position, whatever you were convinced that okay, this is a good investment. You continue holding that position after booking the tax-free capital gains. Okay, so your market position is maintained, your profit, you were able to capture some of the profit without any paying taxes and continue enjoying, howsoever the market or the investment is going to perform in the future based on your conviction. Okay, now let's talk about how it actually works, and are there any benefits, real benefits of taking so much of hassle. So consider that you are realizing this 1.25 lakh of profit every year for 10 years. So you pay zero tax on this. Compared to someone who has not done that and say after the end of 10 years, they want to take the money out and the profit is 12.5 lakhs. If they sell it, the first 1.25 is tax free. The remaining 11.25 lakhs will be taxed at 12.5%. That is almost equal to 1.4 lakhs. So by you harvesting your profits every year 1.25 lakhs, you are saving approximately 1.4 lakh rupees in taxes over 10 years. This is free money essentially for you. Okay, now we are going to take an example of how it can work. I'll go slow, won't get into too much nitty-gritties, because it may confuse you. So just overview how it is working. This is just an example, okay? Suppose I started investing in equities every year, every month, 1 lakh rupees of, with 1 lakh rupees of monthly SIP. 1st January 2024 is when I made the first investment of 1 lakh. Every month I'm investing that 1 lakh. So you can see that SIP amount of 1 lakh is coming. Dates are here. And my purchase price is also given here. Okay, because obviously the price will keep varying. Now I divide these two, the my amount divided by the purchase price to find out okay, how many units or number of shares that I was given. Okay, this column shows that. Now consider that current price of this investment is 120. So current value will be the quantity times the price. So 1,20,000 and other numbers. So after deducting this with the current price, I'm able to find out what is my current profit on these individual investments that I made. Okay, this is the column that is showing you the current profit for each of these investments. Now, I want to realize up to 1.25 lakhs, the closest I can get. So I'll start counting it from here. Okay, 20,000, then 17,000, 14,000. So you over here, you see the cumulative profit. 20,000 plus 17,000 is 37,000 plus 14,000 is 51,000 plus 11,000 is almost 63,000, then plus 4,000 is 67,000. So that is what this column is showing. Now you notice that there is a investment here which is in loss. So you bought in this particular month, the price was 125, which is higher than the current price. So you are incurring a loss over there. But when you're selling this, it has to be, the way it works is first in, first out. So the investment that was put in first will be sold first. So you don't have an option of skipping these investments. It will be in this order. Okay. And so we'll continue seeing, okay, where is it that we are closest to 1.25 lakhs without exceeding it? So this is here I see 1,23,970, almost 1.24 lakhs of profit that I can book by selling all these units. So we sum this up, it comes to 11,866. I'll go ahead and place an order for selling this particular investment wherein I'm selling 11,866 units. Don't go by the amount, go by the number of units so that the mistakes are going to be limited. And I'll be able to realize this profit. Okay. You can go ahead and see this and then you can accordingly execute. Now, few considerations that you should be aware of, that there is a tiny cost that is associated with each transaction. Whenever you are selling it, you pay 0.001% of the total amount. Similarly, when you go ahead and buy that, it is 0.005% of the in purchase amount. So in total, 0.006%, which is a tiny amount that you will be paying on this. And compared to the profit that we are making, it is going to be irrelevant. Now, in terms of the exit load, generally speaking, most of the funds don't have an exit load beyond 1 year. So after 365 days, most of the funds won't have any exit load. A lot of them have an exit load, which is much smaller than 1 year, but very unlikely that is going to be longer than 1 year. So if you have already waited for more than 1 year to make this transaction, exit load should not be there, but you should still check. Another thing is the duration, how long you have waited for this particular investment. It has to be above 365. If it is below 365, you pay 20% tax on the profit, compared to 0% if you just sell 2 days later. Okay, up to 1.25 lakhs of profit. Okay, so be mindful of this. And ideally, when is it that you should be doing during a financial year? That is March. You should do it in March because it may be the case that during the financial year, you may have realized some gains. Okay, due to whatever reason, you may have sold something and you may have realized some profits. Adjust that to the 1.25 lakhs. For example, if you have realized profits of 50 lakhs, 50,000 on long-term equity, you're only left with 75,000. So go ahead and realize only 75,000 from the same table. For example, if it is 75,000, it will come roughly here, 70,825. So you can sell these number of units, not till here. Okay. And another thing, very important thing is that, because by the way, the deadline for this is March 31st. Prefer doing it, earlier, like 15th of March or by 20th of March, ideally. One important thing is that if you don't use this every financial year, you lose it. Okay, it won't be carried forward. So use it or lose it. Okay. Now, just a recap, a summary. Section 112 allows you to get 1.25 lakhs of long-term capital gains every year on equities tax-free every financial year. It applies only to equity investments, both shares and mutual funds, equity shares and equity mutual funds held for longer than 1 year. The way it works is you sell eligible units, book a capital gain of up to 1.25 lakhs, and buy back the same investments if you are convinced that that is where you should continue. Okay, and this just resets the cost price so that later the capital gain taxes that you may need to pay will be much lower. Result is you stay invested with reduced future tax liability, and review every March, because if anything is unused, the exemption cannot be carried forward. Okay. If you have any questions, please reach out to us. This is Jayant's ID. Send him the messages and we'll get back to you soon. Right? Thank you so much and you have a good day.